ZIM Shipping Services just published their annual results, and they are extremely interesting. And I did a video on ZIM around 6 months ago, so now with new results, let's revisit this company, see what is happening with dividends, what is happening with growth, and has the story changed? So first, a quick look at the recent results. Revenue for 2022 is up by 17%. Free cash flow is up by 19.5%. Now, there is a very interesting thing happening with debt. Because even though it's up by almost $1 billion, what is important is that they have more cash than debt. Almost $280 million more. But it is not all great news. Q4 2022 results were much lower than Q4 2021. So if we concentrate only on the short term, it does not look so good. But of course, as value investors, we should concentrate on the long term and take advantage of the short-term chaos. Let's take a look at investors. Individual insiders. That is an X at 1.3% of the company owned by individual insiders. And we would like to see this number over 2%. But what is interesting is that it is actually only the CEO, Eli Glickman, that owns the shares of ZIM. And are individual insiders buying right now? That is an X. We see no transactions in the recent quarter. And do super investors own this company? That is also an X. There are no super investors that own ZIM. So of course, they are not buying. Return on invested capital. That is a check at 36% 5-year median returns. And we want to see this number higher than 10%, so that is very nice indeed. But remember that this is only 5-year median, not a 10-year median, because we don't have access to older data. And free cash flow growth? That is a check at 95% growth rate. So that is absolutely exceptional. And again, it is based on only the last 5 years, so they still need some time to prove that they can keep this up. And what do we know about net profit margin? It is a check at 42.7%, and the sector median is just 6.5%. So they have an incredible pricing power. And now let's take a look at share buyback. It is an X with 20.4% more shares issued in the last 5 years. And in the last year, they issued some more shares, so nothing changed here. We are still getting diluted as investors. And the debt? It is a check. It would take just under 2 years to pay back the total debt with a 5-year average free cash flow. And with a current one, it would take less than a year. And also we have to remember that they have more cash on hand than they have debt. So they are safe. They are prepared for hard times that may come. We have to remember that a drop in shipping rates is very possible. And then ZIM would have to face some major headwinds. So the fact that they used the good times to prepare for the bad times is very smart. Dividend yield. It is a check at 132%, and it is absolutely crazy. But before you sell everything you own to invest in this company, let's take a step back and analyze it. So, this percentage is calculated by dividing the annual dividends that have been paid in the last 12 months by the price. But we know that the next dividend will be $6.40 and not $17 like it was a year ago. So if we take only the last 3 dividends and the one that will be paid soon, we get a dividend yield of 80%. And that is still great. But ZIM is not paying the same dollar amount every quarter. They are paying between 30 and 50% of their earnings. So, if in a certain year the earnings are high, you get more money through dividends. If the earnings go down, the dividends go down. So the dividend yield is not such a useful metric in case of ZIM. It is not accurate in predicting future dividends in this case. But we can still expect a substantial dividend. And what do we know about the payout ratio? It is a check at 44% of net income distributed to shareholders through dividends. And the CEO confirmed that they are committed to keeping this payout ratio between 30 and 50%. And what about dividend growth? It is an X because it is just too early to tell. The first dividend was paid at the end of 2021, so we just don't know where it will go from here. The PE is just 0.4. Now, that is something we don't see too often. Earnings per share are around $38 and the stock costs around $21. So, that is insane. Okay, let's value this company with a discounted cash flow formula. But because this company can be heavily influenced by any market recession or slowdown, we want to be very conservative. So, for this valuation, I will use a 5-year average free cash flow and not the recent one, which is very high. And the growth estimates will also be extremely conservative. Actually, we will use the same estimates we used half a year ago when we were analyzing this company. And that way, we will see how is the situation of ZIM changing. Is it getting stronger or weaker? So, in the low scenario, we will estimate a decline of 15% for the first 5 years and then a decline of 10%. In the medium, minus 5% for the entire 10 years. And in the high scenario, no growth for the next 10 years. So, with such estimates, the intrinsic value in the low scenario is $93, in the medium $160, and in the high scenario $225. But we have to always add a margin of safety to those prices. I use a 30% one, and with such a margin, we get $65 in the low scenario, in the medium $112, and in the high one $158. And the current price is around $21. So it all looks extremely cheap, but let's compare it to the valuation we made half a year ago. As you can see, our current valuation is substantially higher, mainly because of the growing free cash flow. And also, the price is lower. So it is all getting more and more interesting. It seems that the story did not change that much. A lot of investors still believe that this investment can be very dangerous at a present time, that the macroeconomic factors can influence this company's future in a big way, and that is why the price is falling. And on the other hand, we can concentrate on the company and not worry about the economy as a whole. And then we see that the free cash flow is up, revenue is up, that they have more cash than debt, and that the price is very appealing. The only thing that is getting a little bit worse is the dividend. But still, it is an incredible deal. So we just have to decide which story do we believe in. Do we believe that a recession will destroy this company or at least make it suffer for a long time? Or do we believe that opportunities like this only come a few times in a lifetime?